Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research at Red Cloud Securities, and I'm delighted to host a Red Cloud webinar on uranium today. We are going to hear from CanAlaska Uranium CEO Cory Belyk, and he will provide an overview and outlook from the company, and we will then take some questions. So you can type your questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During this CanAlaska webinar, forward-looking statements may be made. I direct listeners to the forward-looking statements outlined on page 2 of the CanAlaska corporate presentation, and that can be found on the company website, canalaska.com. For Red Cloud Securities, I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We'd note this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation, seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on CanAlaska. Now, this is quite an exciting time for uranium and uranium equities. Uranium prices have almost doubled over the past year, particularly since the supply-demand imbalance was emphasized last September, and uranium prices are up over $92 a pound. More recently, the U.S. government has thrown its support behind nuclear power, acquiring and creating heliofuel, and we may even see more Russian uranium import. May even see a uranium import ban from Russia. This increases demand and should filter down into improved performance by the uranium equities. So, Cory, with that, why don't you take it away?
Well, thank you, David, and thank you to Red Cloud for the invitation to present today. It's a great opportunity to tell the CanAlaska story, and I'm really going to focus on several pieces here. One is a little bit about 2023, but really about 2024 and what we have coming in terms of news flow and opportunity for our shareholders to benefit from what we believe is a very exciting portfolio of results and potential results coming in 2024 as early as a few weeks from now as we enter the good drilling season. So, we are a company. We are a company that is taking multiple uranium discoveries to the next level, and that's a bit unique in multiple because we do have 2 and possibly 3 new discoveries in the last 12 to 18 months that we're going to be moving forward in 2024, and I'm really going to focus on that today so that shareholders have a great understanding of what we're trying to do here and the success that we believe we have right in front of us. So I'm going to make some forward-looking statements. I'm going to make some geological discussions here ongoing today as we move through this discussion. So just be mindful of that. Just to recap 2023, and we had some incredible success. And first and foremost, at our McArthur River joint venture with Cameco, we own about 83% of that project now, and Cameco has the other remaining percentage. We continued to expand our 2022 discovery at Pike Zone, extending the high-grade mineralization, showing that it's open in all directions, intersecting the first unconformity-related uranium mineralization at that target in 2023, and we've continued to develop new targets, which I'll touch on later in this presentation. So a really exciting discovery that's completely open and evolving. We had a second high-grade discovery with our partner Denison on our Moon Lake South joint venture, just 30 or 40 kilometers from the Pike Zone between McArthur River and the Key Lake Mill. We intersected 2.5% uranium over 8 meters. We continued to work that project in the fall with Denison. Assays are pending on that project, so I'm not going to talk a lot about it just yet today, but I will tell you we're going to be moving that fairly aggressively forward in 2024 as well. So we had an incredible 2023, and it's only going to get better, we believe, in 2024. So we're a well-structured company. We have, as of a couple days ago, we have 153 million shares outstanding. We've got $15.6 million in the bank, thanks to a $12 million successful raise in November of last year. And we believe we are positioned very well for this uranium bull market, which is clearly upon us. It's clearly upon us and happening, and has a lot of room to grow and continue. So the uranium price is moving. It's moving significantly. As David pointed out, it's $92.50 as of a couple days ago. It's actually $93.75 now. It is flying. And this is a great time for uranium companies like CanAlaska that have a portfolio full of projects that are responding to active exploration over the last 12 to 18 months and resulting in new discoveries, any of which could be the next big deposit in the Athabasca Basin. We're led by a fairly strong technical team. We've got decades of Athabasca Basin discovery experience on the team, led by Mr. Nathan Bridge, my Vice President of Exploration, comes from Cameco, a lot of years of activity under their portfolio, multiple discoveries, worked on the nearby Fox Lake deposit, also worked at Cigar Lake and around the Rabbit Lake or Eagle Point deposit as well for Cameco. I brought on 6 months ago Misty Urbach to help lead the corporate development piece for CanAlaska. She has since moved on to lead Core Nickel. That's the nickel spinout that we completed late last year, but she is on our advisory committee now. So we've got a very strong team in place at the management level, and we've also got a very strong board led again by Ambassador Thomas Graham Jr. out of the U.S. Multiple decades in the uranium space, led the conversations with the Russians to take nuclear weapons grade uranium and put it into fuel for reactors. We've also got good connections into the north through Jeff Gay and the Athabasca group of companies where we operate, and Karen Lloyd joining us more recently from her experience with Cameco in the marketing side. So a very strong board, very, very strong technical team as we work this portfolio toward discovery. So let's talk a little bit about the market. Now, David hinted at it, but really it's about what is coming in front of us. And large and small scale nuclear build-out is happening. And in particular, small scale reactors or small modular reactors are becoming increasingly important. There's no better example in the Darlington plants in Ontario, where small modulars are going in, 300 megawatts of SMR build-out at the Darlington facility to feed clean electricity to 300,000 Ontario homes. This is coming in 2028. From decision right through to first power, 6 years. In Saskatoon, an eVinci microreactors going in. Saskatoon, a city of 300,000 people. This is happening again by 2028. This is an incredible story that's unfolding on a global scale. And what it really means is that we're going to have to triple global energy production by 2050 to meet the goals of clean energy production to help the environment. So this is going to need more uranium discoveries to be made, more uranium production to come on stream. And there's no better way to look at this than really thinking about this historically. For the first time in history, uranium demand is outstripping supply. Supply that includes primary production and secondary supplies. This is the first time in the history of uranium this has happened. It's happened in the past couple of years. And moving forward, if you look at the graph on the right, this is from the WNA in September. And if you take the end of the gray sort of graph on the left, make it that blue line, this is what's moving forward. This isn't even factored in here yet, that you have supply coming offline, current supply coming offline that can't be assisted by current deposits coming on stream. New deposits have to be found, 1.5 billion pounds short, and this doesn't even include the SMR build-out that is anticipated to happen, restarts or extensions to existing fleet. This isn't yet in that graph. What will it be? It will be higher. That little red wedge is just an example of what it could be. It could even be bigger than that. We don't know. The point is, this is the first time in history that production is forecast not to meet supply. This is an incredible story shaping up, and it's going to drive this market. And in fact, it is. Now, this again comes from around September at the WNA. This is from Trade Tech. If we look into where we are today, we're sitting at north of $92 a pound. We're already in this step change zone. This is a step change zone required for uranium price in order to bring new production online. We're already there. We're already moving past it. We're likely to pass $100 a pound very soon, given how quickly this is moving. 92 on Monday, 93.75 2 days later. Where's this going to go? This is a step change environment. It's going to move up into this range. It's going to start to settle, perhaps even go higher. This is an incredible bull run starting in the uranium market, and it's led by the fact that there simply is not enough production to meet the demand. So this is where CanAlaska comes in. We pride ourselves on being that hybrid model, that active explorer and project generator. We have over 300,000 hectares of land focused in the Eastern Athabasca Basin. More recently, we've been repositioning our portfolio back to the Eastern Athabasca, and I'll articulate why that's important to understand a little bit later in this presentation. But we do research, we acquire, we do deals, we bring in outside investment in order to advance this large portfolio of projects. ultimately all towards discovery. So we attempt to minimize shareholder dilution and maximize capital gain based on this hybrid model of active exploration and project generation within this very large Eastern Athabasca portfolio. We also have nickel in our portfolio. As I indicated, we spun out many of our nickel assets into a new company for our shareholders late last year. We do have some residual projects that are under option to NickelX out of Vancouver, and they'll be moving that forward in the coming years. So we've effectively monetized our nickel assets, and I'm not going to talk more about that today. I'm going to focus really into the uranium story, which is where we have retrenched and refocused and are moving these discoveries forward in the Athabasca. So for 2024, we have announced yesterday aggressive plans at three of our projects, principally West McArthur, Moon Lake South, and also in conjunction with our partner, sole funding our projects at Geekie, North Millennium, and Marshall, where we are moving these three discoveries forward. West McArthur, $7.5 million for next year. Moon Lake South through the joint venture is a $2.7 million approved spend, of which we're $0.675 million. And then we're having a better part of our $15 million deal with Basin Energy being put into the ground and drilling on three projects, Geekie, North Millennium, and Marshall. So beyond that, we do have other projects we've been advancing or wanting to advance. We're going to start moving those forward, again, geared towards our exploration or perhaps deals, and that's in our Frontier, Enterprise, and Constellation projects. And we always look for new staking opportunities. So we have a very aggressive 2024 plan focused in the Eastern Athabasca Basin. So this is what we have coming for news flow, at least from drilling programs. We're actually this week heading out to West McArthur. We should be drilling there within a week or so. We've got Moon Lake South starting in probably February. We've got Geekie starting in February as well. So we got three pretty big drill programs coming in Q1 of 2024, all of them on discoveries. West McArthur at our Pike Zone, Moon Lake South at our new discovery with Denison, and at Geekie on perhaps the new mineralization intersected in the very first drilling program last year. In the summer, we move into Marshall and North Millennium drilling. That's just south of our West McArthur project. Probably additional work at Geekie, and we will be back in at West McArthur as part of that $7.5 million spend. So we've got a very, very aggressive 2024, and we're looking forward to a lot of news flow for our shareholders. So our portfolio, it's shallow, mid-depth, and deep, anything from an arrow or Eagle Point type analog around the periphery of the margins of the Athabasca, or even within the Athabasca Basin, through to mid-depth at like Moon Lake South, out to our deeper projects like West McArthur, which is more like the McArthur River deposit. So we use new geophysical tools and experience-driven ideas to drive us towards discovery of new deposits in the Athabasca Basin. So West McArthur, let's get focused at Pike Zone. This is, as we've talked about before, the Eastern Athabasca Basin's newest high-grade uranium discovery. So what you see here is the McArthur River mine on the right. That's 700+ million pounds of uranium sitting right there, just 12 kilometers away from Pike Zone. The haul road goes down to Key Lake on the right side of this image. What's really important to understand is when you look at the McArthur River corridor, it's a series of multiple pods or zones, starting with the P2 main pod at the south end. 4, 5, 6 kilometers to the north, you have the main McArthur River deposit itself, which is about 6 different zones over about 2 kilometers of strike length. This is how these deposits form, pearls on a string. That's a very common analogy that we use here in the Athabasca Basin to describe how these deposits form. Fox Lake deposit nearby, no different along the C10 corridor. It's 70 million pounds at 8%. It's 3 different zones. 3 different zones over about 2 kilometers in strike length. Then we move over 3 kilometers and there's 42 zone, our mineralization on our side of the line at West McArthur. And then you move down another 4 or 5 kilometers, you have Pike Zone. Pearls on a string. So what is Pike Zone? I think this is where I sort of digress and say, okay, we have to use what we're seeing at different scales to help guide the exploration at Pike Zone. And here's some examples in geology of geological repetition at different scales. You've got hoodoos. Most people are at least aware of what hoodoos might be. You've got anything from a millimeter scale through to a centimeter scale to a meter scale. That's how these things form. If you look at folding of rocks, On the left-hand side, you have millimeter scale of folding. Then you've got meter or tens of meters of folding in the mountains, the Rocky Mountains. This is a photo I took a number of years ago of the folding in the Rocky Mountains. And you take that up to multiple kilometers or tens of kilometers around Flin Flon, and you see this large-scale folding in that environment around the main Flin Flon mine. So repetition of geological features at different scales is really important to understand. And this is one of the tools that we're using at Pike Zone, just in simplicity, to help guide our exploration. I've shown the image on the left before a number of times. This is a photo that I took from 400 meters below surface at Eagle Point on one of the main ore veins, the O2 Next deposit, 100 million pounds of uranium. It's less than a meter wide. But all that yellow and black and the stringers along that vein of this high-grade mineralization, if you just take that and you snip it out, that's 4 meters wide, you rotate it and drop it in at a 400 meter scale at Pike Zone. Pike Zone on the right-hand side here. The orange ribbon is our target horizon at the unconforming, just for reference, and all those stars of the mineralization we've been hitting at Pike Zone. This is the scale that we can take what we know about Eagle Point and move it into the larger environment at several hundred meters of scale. This is the complexity we would expect to see in any one of these uranium deposits in the Athabasca Basin occurring at meter, sub-meter, meter, and then hundreds of meters and perhaps even kilometers of scale. So this is the approach we're taking at Pike Zone. We only get a few chances to try and iron this out at these depths and with these drill holes. So the team has been very busy working this mineralized zone, taking it cautiously, understanding the geology to make the best informed decisions for those drill holes. So we have more work to do here, but what I'm trying to say is that nothing at Pike Zone surprises us. It's exactly as we would expect to see based on deposits like Eagle Point, Arrow, McArthur River, for instance. This is exactly what we'd expect to see. So the team is working it out, and they're moving it forward in 2024, targeted around Pike Zone to help build this story and understand what we might be onto at Pike Zone. Now, we have to remember that McArthur River, Cigar Lake, the Fox Lake deposits nearby to 42 Zone and Pike Zone all occur as pearls on a string. So we don't want to just find a Pike Zone over 100 meters, 200 meters, 500 meters. We want to find multiple zones of mineralization. This is probably the way these things form. And our new geophysical data from 2023, this is just hot off the press. This is just literally a few weeks old here, have highlighted 2 new target areas within 1 kilometer, 2 kilometers of Pike Zone in either direction. Remember, we had some interesting results just north of Pike Zone, 800 meters away, where we hit alteration, some structure in the lower sandstone. We overshot the target just 800 meters north of Pike Zone. It looked very encouraging. Well, it sits just on the edge of one of these new geophysical anomalies at the unconformity. At the unconformity. This could be the Cigar Lake. It could be McArthur type deposits right at that unconformity. This is the geophysics telling us you need to drill adjacent to Pike Zone for a few kilometers, finding these pearls on a string like McArthur, Cigar, Fox Lake, that all occur over several kilometers of strike length. This is just the tip of the iceberg at Pike Zone. We're going to focus on this in 2024 as well, looking for extensions, looking for new zones of mineralization while we continue to advance Pike Zone proper. So we're going to have 2 drills turning, all of them focused on advancing this literally 4-kilometer stretch of target area. Now, working at West McArthur, I get a lot of questions about depth. Well, we're innovative in our approach. We believe we're the only company currently, certainly junior, working in the Athabasca Basin that deploys directional drilling technology. This helps us optimize our drilling at these depths. On the left-hand side, if you look down on the drill holes, this is what it looks like. It looks like a spider web. It's just going everywhere. Why? Because we can control where that hole goes. And we start that control around 500 meters depth. We drill 1 hole, we come back 500 meters down, and we off-cut. And we off-cut with a mud motor, shown here in the lower right. It's a little attachment, goes on the end of the drill bits. It's run by water pressure, and you can angle the hole and start a new cut. We can actually deviation drill with this. So we estimate that we got at least 4 additional tests of our target horizon for the same spend. That's roughly $1.25 million in optimized drilling using this technology. As an aside, it significantly reduced our environmental impact. We can drill multiple holes, in this case 4, from 1 drill pad setup. We don't have to be moving, we don't have to be clearing. This is very, very good technology. It allows us to do a number of different things very well. Again, we believe we're the only ones doing this. So that's a little bit about the CanAlaska story at Pike Zone in West MacArthur. We're going to continue to advance Pike Zone. We're going to continue to look out from Pike Zone because we know that these things have to occur. These deposits have to occur over multiple kilometers in strike length. Pike Zone, we believe, is just the tip of the iceberg. Incredible alteration, incredible mineralization of 25%. Look forward to moving that forward in 2024. Moon Lake South, just 30, 40 kilometers away from the Pike Zone, shown here in the top. This is Denison's the operator. We own 25% of it. This is a new discovery we made in the spring, and it's high grade. It is roughly 8 meters at 2.5%. It's just a few kilometers away from their Phoenix and Griffin deposits, right where they're trying to put Phoenix into production using ISR methods. We did go in here in the fall and do additional drilling. We're waiting on assays. I pointed that out before. We're waiting on assays from that program, Denison's operators. So we'll report those results when it comes. But what I will share with you is that the joint venture has approved a $2.7 million spend for 2024, which we're happy to contribute to move this forward. This looks every bit like another potential major discovery. It's up in the sandstone. This mineralization, it should not be there. It should be closer to the unconformity. This is a very, very interesting target. The program in 2024 will consist of geophysics and drilling. The geophysics to better refine the target for tighter space drilling. So we're very, very encouraged to be moving Moon Lake South forward. I mentioned in February, we'll be back into Geeky. Our partner Basin Energy is operating this next program. It's part of a $15 million option arrangement that we signed about a year ago. The first drilling program ever on this project takes strong alteration, reactivated structures, elevated radioactivity, and in the second ever drill hole, shown here in the red star, mineralization. Yes, 0.27% over a half a meter, but it's the start. It's showing that there's mineralization down into the basement rocks along one of these major structures. This is the same geological model being deployed as associated with the nearby Baseload Energy's Accio deposit or 92 Energy's GMZ. So we're in the right geological terrain, we're in the right geological model, and our second ever drill hole hit mineralization. So yet a third potential discovery within our portfolio, some of which we control in terms of spend. The other two are run by option or joint ventures. Incredible story unfolding within our portfolio. I believe we're the only junior explorer that has multiple discoveries on the go in the Eastern Athabasca Basin. Why is the East important? Well, I've shown this before, but I really want shareholders or potential shareholders to understand what is coming in the Eastern Athabasca Basin. That is a world where if Cigar runs out of ore, which could be anywhere between 5 and 11 years from today, depending on uranium price, let's assume that phase 2 goes ahead. It's 11 years of mine life. McArthur River is up and running again. It's got about 15 years of mine life left. In 15 years, there's no uranium production from the Eastern Athabasca Basin. 3 mills sitting idle. Now, this doesn't account for Denison moving forward with ISR. That's yet to be determined. But in the sense of Cigar and McArthur, 2 to 3 big mines on the planet are going to be without ore and certainly without production coming from the Eastern Athabasca Basin. This is where our portfolio in the East, if we're successful in any one of these 3 projects or multiples of them, could backfeed this capacity, this milling capacity, roughly 65 million pounds of capacity, potentially sitting idle within 15 years. So this is why we focused in the East, and we started to move ourselves out of the Athabasca Basin margin. Now, you do not have to be within the Athabasca, the present Athabasca Basin margins, to have success. Arrow, Eagle Point, both go down to about 1,000 meters of depth below that unconformity. So if we look at the Athabasca Basin where it used to be at the time of ore formation, let's step back about 1.7 billion years ago when these deposits started to form. The Athabasca Basin was much larger. And I just want to point out that, given the fact that we have the Pinkham Lake sandstone outlier shown here at the top end of the slide, and the Riley subbasin shown here in the bottom right part of the slide, these indicate this is actually the 0 point, potentially 0 point for the Athabasca Basin unconformity, shown by this blue line as a minimum 1.7 billion years ago. It was probably further. So there's every opportunity to find an Arrow, an Eagle Point, some analog to those basement-hosted deposits in the right geological framework, and that's what we've been focused on, repositioning our portfolio not only to the east around the infrastructure, but also into the right geology that's really underexplored. No one was looking for Arrow or Eagle Point analogs until about 10 years ago when Arrow was discovered. So this is part of our story. We're in the right geology. We're in the right infrastructure-rich area that's going to have a need. And this is why we believe any discovery we can make in this area is automatically going to see multiples of value if we're successful. So we can't do it all. We are that hybrid model. I articulated that earlier. We have a lot of projects available for joint venture or option. Some of them we're moving forward ourselves, like West MacArthur or some of the projects south of Key Lake. We're moving projects forward with partnerships like Basin Energy, part of that $15 million deal we did 12 months ago. Success already coming from that portfolio on the Geeky project. And we've got other big ones like Cory available for option. So an incredible portfolio, an incredible time for CanAlaska, an incredible time where we're advancing multiple discoveries forward with partners and on our own. So we are advancing those new discoveries. We are ticking all of these boxes, we believe, and we really are drilling on these multiple new discoveries in 2024, and there's going to be a lot of news flow coming from CanAlaska for its shareholders, and in what is an incredible market shaping up. A big bull run is on the way, already ongoing, and this is just a great time to be in the uranium space, and we believe we're positioned very well to take advantage of that. So with that, thank you for your attention, and yeah, have a great day.
Great. Thank you very much, Cory. Great presentation as always. So we are now going to kick off the Q&A portion of the webinar. Reminder to everybody watching, you can type your questions into the chat box at any time. And we already have a couple of questions, but great geological discussion as always, Cory. And I think you and I are probably glad that much of the Athabasca Basin has already been weathered away, or else these deposits would be really, really deep, and it'd take a long time and a lot of money to find. So.
Well, I agree with you, David. If you think back to the time of ore formation, MacArthur is probably forming at depths of about 7 kilometers. So let's just put that into perspective. You've stripped off, 5 kilometers of sandstone, and that's the opportunity we see outside the margins of the Athabasca. Not many people understand that. Think of the Rocky Mountains in Manitoba shedding into the sandstone basin. They don't exist anymore. That all went somewhere. It went into the Athabasca, formed these deposits, stripped it away, and exposed it for our discovery. So,
great point. Great point. Good. So the CanAlaska business model, it's been best described as a project generator model. Is there any consideration of future projects being entirely owned and developed by CanAlaska?
Yeah, and in fact, it's a great question. We actually do that. So I tried to articulate that we run a hybrid model. So, an example might be West MacArthur. That was conceptualized in the last cycle, really hasn't seen, post-Fukushima, hasn't seen a lot of work until about 2018 or so when we sort of took it over and carried it forward after Cameco did some work and made the initial holes or discovery holes at 42 zone. So we're carrying that forward. We carry our key extension project forward. Creased is 100% owned, but we deploy different aspects there. One, we explore where we believe we can go out and make a discovery for our shareholders, where the risk is perhaps a bit higher, or their idea is perhaps less crystallized. We'll look to bring outside funding in, and that's the project generation model, where we bring in cash and shares and share the risk as we move those toward discovery. So yeah, we deploy both, absolutely.
Yeah. And as we are seeing uranium prices spiking, are you seeing any added interest by potential partners seeking projects out there? The barriers of entry aren't necessarily that high in the Athabasca, but certainly good ground is limited, and these aren't easy deposits to find. And, access to people, I think, is as important as access to land.
Yeah, it absolutely is. Well, if you put the people on the wrong land, no matter how good they are, they won't make a discovery, but they will do the right work. So we have both, and we're continually looking for new lands to put our people on. And the Athabasca Basin in particular has been staked up almost completely. So one of the ways the companies get in is through avenues like CanAlaska, where we have projects for options. So it's an entry point. And that's exactly the Basin Energy story. They wanted an entry point listed on the ASX. We had 3 great projects that we newly staked. We spent $50,000 on them and turned them into a $15 million deal in 6 months. And that's the project generation business. Now, in terms of people, and where we're the explorer, not just the project generator, we actually have a team here of about, varies from month to month, but we're running a team of about 10 geos. And, as I mentioned, my VP of exploration, former Cameco, good friend of mine, very talented geoscientist, part of multiple discoveries, is leading this team. And we've been building it out over the last roughly 2 years. And we've attracted in 2 senior Orano geoscientists to help us move these forward. One's leading the West MacArthur charge, very adept at the directional drilling from his Orano time, work around Shea Creek, for instance. And the other also coming out very talented from the Orano system and helping us move our key extension project forward as an example. And also actually ran the project at Geeky. So, one of the things we can do for partners wanting to enter the Athabasca Basin is actually run the projects for them. So operate for an operator fee. That's another way to generate cash for CanAlaska is through the project generator model, is that we can actually do the exploration. And, ultimately those companies, will have, final say on the spend and the targets, but they rely a lot on our experience and our expertise and our understanding of the geological frameworks that we want to be seeing and targeting to actually make those decisions. And that through our operatorship, that's the value that we can bring to the table for any potential partner.
Mm-hmm. Okay. You mentioned SMRs in your open, and, I guess how would you describe the U.S.'s interest in these smaller reactor solutions?
Yeah, I'd say the U.S. interest is yet to form, but I would say it's very strong. And I say this because when I attended the WNA sessions in September, a senator from the U.S. senator was actually up on the stage talking to Sama and articulating the fact that, they're looking to Canada because we're doing it in Canada as an example. They're looking at Canada to help them get over some of the red tape, the lines for SMR deployment, because we're doing it here in 6 years. Decision, build out first power, 6 years. They're looking to Canada to assist them to move through that process. So I believe the U.S. will be one of the largest SMR players eventually. They're having some hiccups, but I think those will get solved. They will get solved and they'll move forward. And this is, again, happening on a global scale. With or without the U.S., this is happening on a global scale. And it's just remarkable to see and experience. And I've been in this 30 years. And I haven't seen fundamentals like this ever in my 3 decades of experience in the uranium space.
Yep, I agree. I've been watching the space very, very closely since mid-2007, and I don't think I've ever seen this sort of excitement, supply-demand fundamentals, strong, and this time around, not only are the environmentalists on board and the investors, but you've also got the government policy. And, I think one of the reasons we saw the uranium prices spike yesterday, and I put it in the chat box here so everybody can take a look at that. But, the U.S. put out a request for proposals. They're seeking, they're going to be seeking HALEU fuel, essentially suitable for the SMRs. So, and that will require uranium, it'll require conversion, and it'll require enrichment. And I think those first two, uranium can be found, and I know we're talking about it and we talk about it a lot, but the conversion and enrichment are some of the bottlenecks that are needed for the nuclear power industry in the West, especially if we take out Russia's involvement. So I think this is definitely positive in moving that forward and making sure that capacity increases there. So it is timely. So
yeah, absolutely, David. It's one of the fundamentals. It's one of the fundamentals. Uranium is very abundant. Economic uranium is not necessarily very abundant. It can be with the right price change. And I think that's where I'm coming with the step change. I spent a lot of years traveling the world looking at different deposit models for Cameco back in the day, and they ended up retrenching back to the Athabasca Basin for a reason. Tier 1s are rare. Tier 2s are more common, but they require, $80, $90, $100 a pound forward selling. And that's starting to occur. That forward selling is starting to occur at a price, I think it's north of $100 a pound right now, actually, if I go back to some of the data. We're starting to see that happen. And what this is going to do is set up new mines coming on stream, but those new mines in many ways haven't been found. They haven't been found big enough to replace what's going to be lost, and let alone what's going to be required in new demand. And I think that's the key. And when I showed that chart, and this comes from Misty and her experience, deep experience in chemical marketing, it's like, this is the first time in the history of uranium we've seen demand outstripping all supply, and all supply being secondary plus primary. And that's why I showed the next graph where I drew the line and said, okay, now let's look beyond that gray graph. Well, guess what? That gray just falls right off. Mm-hmm. That's accounting for some of the new big deposits potentially coming on stream in the next 15 years. So we need new ones. We need big new ones to help fill these on literally a global scale. It's incredible. Incredible stuff.
Right. And you can't have your cake and eat it too. The enrichers won't be necessarily doing a lot of underfeeding if they're busy doing work for nuclear power plants, which is what they were designed to do anyways. So,
correct.
Yeah, that material won't be available from the secondary supply. So, great. Let's move on to the company here a little bit. You spent some time streamlining the firm last year, spinning out the nickel assets and focusing more on uranium. Is there anything else to do in that regard?
Anything else to do in that regard? No, we've effectively monetized the nickel. So that's, that spend will be borne by others as they move some of that portfolio forward, which we're looking forward to working with Nickel X on. We do have some copper assets, but they are not a distraction. They're not in need of work. They're not something we're focused on. They can idle away. But if anyone's interested in VMS, we've got some incredible targets in Euro 10. We are truly focused back to uranium. And we're continuing to stake. We're continuing to, look for opportunity in the right geological framework to actually build projects of value that will attract in the outside investment. And I think one of the earlier questions was to that point. Maybe I didn't answer it very well because, some of these things we can't really talk about under NDAs and such. But what I will say is that in the last 30 days, my Christmas break was not a great one. The last 30 days, the conversations have really ramped up. And of course, you take uranium from $75 a pound and move it to $93.75 this week, that interest is flowing in. So we've got a portfolio built to invite partnerships into. And I'm certain and confident that those partnerships will get quality projects in one of, if not the hottest exploration jurisdiction on the planet for potential tier one discoveries that the world clearly needs. And it's we're going to be busy in this year doing deals, I believe. I think it's coming, and I think it's coming fast, and I think it's going to be a wild ride. So hang on. Right.
Now, how does CanAlaska prioritize the development or advancement of multiple discoveries here? Obviously, you've got Pike Zone at West MacArthur JV, where you're operator. Moon Lake South JV, you're not operator there. But what are the things that you have to think about here? Is it personnel, logistics, budgets?
Yeah, it's all of it. It stems right from, I think. Let me just frame this for you. Before we stake projects, I task the team with believing the story, the geological story. We're not a land holding company. You hold land, it's expensive. Okay? You have to maintain it. Okay. So one of the things that I think we pride ourselves on, and some of the staking you'll see in our portfolio is very targeted. It looks perhaps skinny, and it's for a reason. It's because that's the geology. We don't want all the waste rock, if you want to call it that. We want the true targets. So I think Nathan and myself have been very clear with the team that don't bring an idea to us just because it's open land. Bring it because you believe in the geology. Now, we can't do it all. Over 300,000 hectares takes a lot of money to explore. Incredible amount of money to explore. So access to financing, of course, dilution is a consideration. So we focus in on the projects we believe have the best potential with our spend, our shareholder spend, the best potential to result in discovery. We just happen to have West MacArthur on that mineralized C10 South corridor, already host to pushing 100 million pounds of uranium, probably, certainly with Fox Lake at 70 million pounds. So we are on a very fertile corridor. That's where you want to focus. Now, key extension. The geology is correct. That's just south of Key Lake. It follows the Key Lake fault. It follows one of these critical crustal scale boundaries, which you can actually take all the way through that eastern Athabasca Basin. MacArthur sits around that boundary. Millennium sits around that boundary. Cigar Lake sits around that boundary. You may or may not articulate that Hurricane sits on that boundary. The point is that boundary is important. Well, we've pretty much tied up that boundary south of Key Lake for, 30, 40 kilometers. That's why. So we're going to explore that because we believe there's an Eagle Point there. We believe there could be an arrow type analog there. So that's some of the ones we're going to focus on. But there's some others that have the right geology but higher risk, a little less understanding. We're going to move those forward. So it's really a judgment call, David. But when we do a deal, we want a residual interest generally or royalty, so that if there is discovery by another party on one of our generated projects, we can realize that upside for our shareholders either through direct ownership or residual ownership through a royalty that preserves that upside. So yeah, real balancing act there. But we focus on what we believe we know or think we know, and focus on the highest priority ones.
Okay. Do you have any desire to look outside the Athabasca Basin? You know, I know there's been added attention to the Thelon Basin and none of it lately. Would there be any jurisdictions either inside Canada or outside Canada that would interest CanAlaska?
That's a loaded question, David, and I've been picked apart on that one before, but I will say that for CanAlaska, we are very focused on the Athabasca Basin. We believe as we build this, the Saudi Arabia of uranium, and we still believe that if you put it into oil context, this is where we believe we have a portfolio that could generate that true tier one, the Arrow, the Eagle Point, the MacArthur, the Cigar, and we're seeing signs of it already. So there's no reason for us to look outward. You know, some of those other regions you mentioned are a little earlier stage in terms of development potential. Could there be assets there? Yeah, sure. I mean, the Thelon Basin was connected to the Athabasca at one time. They were the same basin, but they have slightly different histories. And I think that's what makes the Athabasca a bit more unique than the Thelon. Hey, there's mineralization clearly in the Thelon Basin as well. And it's just we've got enough on our plate what we believe is the right geology and right jurisdiction for us. And we're going to stay focused there. We don't want to dilute the story and move outward. So that's our game.
Okay. And you mentioned your drilling will begin shortly. So what does the weather look like up there in the Athabasca right now? Was December and so far in January good for ice making, freezing the swamps?
Yeah, you know, it doesn't impact us at West MacArthur at all. We're high and dry there over the mineralization of Pike Zone, even along that corridor. So we've got full year-round access right off the right south of the MacArthur River Gate, the mine gate. So we just turn off and we drive in, not a problem for us year-round. But I'm hearing that ice conditions are variable, as they are every year. It's a bit warmer this winter, perhaps, than others. But you know, there's lots of time. It's early January. You know, 10 days ago in Saskatoon, we were brown. There's not a speck of snow here, and now I was shoveling 2 feet of snow out from front of my house this morning. So you know, it changes quick. But I think conditions in the north are not any different than most other years. And again, it's not impacting our exploration efforts at West MacArthur. And yeah, we're good to go in days.
Okay. So maybe Pike Zone, can you maybe provide a little bit of additional color here, how the Pike Zone compares to Cameco's Eagle Point mine, where you've got some experience maybe with relation to size or grade or, you know, thickness?
Yeah, so this is one of the things we've talked about before, and it gets us excited when we start thinking about what Pike Zone could be. And that's why I use that image, because that's one that I took, and it's about 15 years old now, but it's 400 meters below the unconformity. So 400 meters below the unconformity of Pike Zone, that's what you might see if it's an Eagle Point type analog. But importantly, it's the structural complexity within that vein network. And that's exactly what we're seeing at Pike Zone. It is truly a basement hosted system. Now, having said that, these basement hosted systems almost always have some form of unconformity type deposit or expression. And that's what we're kind of focused on. You know, could Pike Zone be an Eagle Point at depth? Yeah, it could be. It could be. But, you know, we also realize that, you know, 100 meters away, 200 meters away, a kilometer away, it could be actually the Cigar, the MacArthur Zone 2, you know, the Fox Lake type analog at that unconformity. This is all part of these systems that form both basement and unconformity mineralization in the same location. And Eagle Point, if you think of Eagle Point is no different. Eagle Point actually has an unconformity expression 5 kilometers to the south. It's B zone, A zone, D zone, F zone. Those are all unconformity deposits sitting in the classic contact zone at that unconformity. And they together hold almost 100 million pounds just south of Eagle Point. So if you put Eagle Point with those, you're looking at a deposit of 300 million pounds. 300 million pounds, David. So, you know, we're very aware of what pike zone might represent, and it could be basement mineralization, looks every bit like an Eagle Point, perhaps an arrow. But we're also very conscious we have not drilled a single hole to the southwest. And I tried to show some of these anomalies that are coming up just a kilometer away. We're going to be on those in 2024, in fact, in a few weeks' time. So we're conscious of growing pike zone, but also looking for what should also be there, which is an unconformity expression somewhere along that system. And we see this at McArthur. You know, McArthur River is not necessarily truly an unconformity deposit. It's unconformity related in certain parts. Some of it goes down into the basement, like it's zone 2. So, you know, eyes wide open about what pike zone could be. If we stay focused on trying to drill out pike zone, and we will get there without touching, you know, outward 100 meters, a kilometer. I think that's not doing our shareholders any benefit. So we're going with 2 rigs, and we're going to focus on 2 fronts here: pike zone expansion and extension, and just a little bit outward.
Excellent. Exciting.
Yeah, exciting.
So the Moon Lake South JV, how rare is it to having uranium perched up in the sandstone? You know, I know the 100 million pound Shea Creek project in the Athabasca has uranium everywhere, you know, perched unconformity basement. But is this perched uranium at Moon Lake more about the suggestion that there is uranium in the system and that it could be found elsewhere, like typically in the basement unconformity?
Yeah, well, that's exactly right. I mean, finding uranium up in the sandstone, I would say, is not rare. Finding uranium of that grade and thickness up in the sandstone, 30, 40 meters above that unconformity, is a little more rare. If you look at Cigar Lake, you know, you go 100 meters up in the sandstone above Cigar Lake, you've got wisps of mineralization up in the sandstone, but it's those faults that link back to Cigar Lake that are moving that uranium around and allowing it to form under the right chemical conditions up in the sandstone where it shouldn't actually drop out. There's nothing there that will drop the uranium out. So it's a very special circumstance where you get mineralization up in the sandstone. The north end of Fox Lake, Cameco spent 3-4 years fooling around. I'm going to say fooling around, that's maybe not fair, but trying to figure out Fox Lake in perched mineralization, you know, 80, 90 meters above the unconformity, not too dissimilar from what we're seeing at Moon Lake South before they got on to what Fox Lake really was. And they stepped over 500 meters and drilled the first high-grade intercepts in what is the central zone of Fox Lake, or the start of that 70 million pounds. So we're very conscious, as is Denison. We know their group very well, very good, very talented geoscientists. They're razor focused on this. They're like, okay, this is up in the sandstone. It's this kind of grade and width. It's linked back to something at the unconformity or down into the basement. And that's why we're doing the geophysics in support of the next drilling program. And that next drilling program should be starting sometime in February. So, you know, we're pretty excited about what it could mean. You know, it's unlikely that it's going to be a deposit sitting up in the sandstone only. It's more likely to be linked back to something where it should be forming, which is at the unconformity or down in the basement. And that's the key. That's the key, is what it's telling us the potential could be here, because it should not be there. It really should not be there.
Yeah. So why has that much uranium fallen out that high in stratigraphy at Moon Lake? What caused the reducing environment? Was it pyrite, hydrocarbons, perhaps graphite?
So there's a number of things that can do that, but generally it's linked back to graphitic sediments in the basement, and we do have graphitic sediments nearby in the basement, faulted graphitic sediments in the basement. In fact, this mineralization, this high-grade mineralization, Moon Lake South, how we got there was over the last 2 drill programs along that 4-kilometer stretch of what is the CR3 fault, let's call it that. We saw elevated uranium all along it, 2 or 3 or 4 different places, and then we got into this one. So it's part of a big mineralizing event along a fertile structure, and that structure is graphitic, that structure is faulted. So it's good. So it allows the mixing of the fluids, the mixing of the reducing fluids that generally come from the basement. This is again a bit technical, but the point is you need the graphite to create the right chemistry to drop out the uranium. So if you move that fluid in contact with the graphite up into the sandstone, that's where you start to drop out the uranium as it passes through that system or mixes. So it's a bit of a unique scenario. So it's this ingress-egress model. So in this case, it'd be the egress. It's coming beyond the basement or unconformity contact up into the sandstone, drops that uranium out. So you got to go back to that source of the reducing fluids, and that's generally the rocks in the basement. And somewhere around the unconformity or down in the basement is about where you would expect to see the exactly right conditions to forming a major deposit. So again, 8%, 2.5% uranium over 8 meters in the sandstone, extremely rare, but not uncommon to be occurring. And you see it at almost all the deposits, some form of mineralization up in the sandstone, but it leads you back to where the real deposit lies, which is at the unconformity or down in the basement.
Right. Okay. Well, we're almost back up to the top of the hour here, about 10 minutes. So maybe just one final question here. And actually it's a back to the, to something we talked about earlier, you know, your people interested in doing partnerships with you, JVs with you. What countries represent the highest interest in participating with CanAlaska on projects? Might it be the Aussies, other Canadian companies? Who's looking?
If we step back, it's a great question. If we step back 12 months, I would say the Australian companies were first movers in terms of getting access to some quality projects in the Athabasca Basin. You don't have to look any further than Basin Energy, where we provided the listing projects for them, brand new IPO, great assets, and now mineralization on one of them. So the ASX back in that time was more dominant, but I would say more recently, and I spoke about 30 days ago, the switch that kind of happened, those are more local. Those tend to be Canadian based. And, you know, for us, I think that's a good mix. So I would say right now the conversations are leaning more toward the Canadian scene, whereas 12 months ago, 18 months ago, they were leaning more towards the Australian contingent.
And would those be new Canadian companies or pre-existing Canadian companies?
You're drilling down. I would say both at this point. Right. Some are more mature, but very, you know, I'm always conscious of working with nice, clean entities, so to speak. And these are nice, clean entities that are showing a real interest in getting into the uranium space. And we just happen to have assets that are quality and that actually are showing, are garnering some interest out there. So yeah, I would say leaning more towards Canada versus Australia at the moment. That could change.
Okay. Well, let's wrap it up there. Cory Belyk from CanAlaska, thanks for speaking to us today.
Well, thank you, David, and thank you to Red Cloud, and thank you for the listeners. It's a great story to talk about, and we're looking forward to 2024. So thanks again.
Okay, thank you everybody else for tuning in. Reminder, Red Cloud Securities, we will be back next Tuesday afternoon when Alina sits down with NorAm Lithium. So that's January 16th at 2 p.m. Eastern. Have a great day, everyone. Thank you very much.